Good evening, this is Greg Michalowski from FXDD, and this is New York Evening Far East Opening Forex Report. I remind everybody that trading Forex is risky and should only be done with capital and not changing lifestyle. Traders can lose all their risk capital trading Forex. FXDD is not guaranteed. Any recommendations made within this commentary. Traders should make market assessments and take trading position based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage that is congruent with your personal risk tolerance. Although care was taken in creating this report, FXDD does not guarantee the accuracy of the information. Well, during these reports that I've started to do for FX Street, I'd like to take a look at the technicals, take a look at the certain things that we do look at in regard to markets and their movement and certain systematic way of looking at the market, including things like the moving averages, trend lines, Fibonacci retracement levels, all the tools that we use in order to analyze the market to give a bullish or bearish bias to the market. And by that I mean, okay, let's take a look at the euro versus the US dollar, and we'll take a look at this blue line right here. This is the 100-hour moving average. The green line is a 200-hour moving average. The blue line is going to determine whether we have a bullish or bearish bias. If the price is below the blue line, below our 100-hour moving average, the bias is to the downside. If the price is above the blue line, the bias is to the upside. We get confirmation of the trend type move if the market is able to break through the 100-bar moving average and then move through the 200-bar moving average. In this case, it's an hourly chart, so we move through the 100 and then move through the 200. In this case, we never got the confirmation during the New York session that the bias was, that the trend was going to continue to the downside, although we remain to be bearish because we are below the 100-hour moving average. So if in order to turn the bias back to the upside, the price is going to have to move above the 100-hour moving average and close above that 100-hour moving average. We tried it right here in this hour, but it failed the next hour, and over the next few hours, the market has gone up there in one hourly bar, but this too failed, and the market is now below that level. It never closed above that 100-hour moving average in any case. So with that 100-hour moving average coming in at the 136.36 level, as long as the price can remain below that level, the bias is going to remain to the downside. We're going to be targeting this 135.94 level on the downside. In addition, we have the 50% retracement of this last move that took the price up from this low of 134.37 to this high that we saw on Thursday at 137.37. If we're able to break below or break to the downside, then we should find support against this 200-bar moving average and against the 135.86 level. Both of those are around the same area, so we should see some support in the euro versus US dollar at that level. Now let's take a look at the 5-minute chart in regard to the euro and see if the bias, what the bias is saying for that currency pair. So like the hourly chart, we are maintaining a price below the 100-hour moving average here. Note that the 200 and the 100-hour moving average converged here along with the price, and when the market broke through to the downside, starts to move to the downside, and we went all the way down from this level at 136.65 down to a low of 136.06 before we saw the rebound to the upside. Now the 100-hour moving average, 100 bar, comes in at 136.41, very similar to where our 100-hour moving average is. So as long as the price can remain below these two levels, this 100-hour, which is 100 bar, which is starting to move down, and the 100-hour moving average, we should see the bias continue to the downside for that currency pair. If it's able to move above, we see some further upside potential for the euro. Where is their topside resistance? 136.54 is a key level. Look at all the highs here and the lows here that we had against that level, and going back in time, you can see a high here against the level. We also can go back and look at a high here at 136.4, a high here at 136.54. So that's a key level on the top side. Another key level on the top side, should the market start to move up, is 136.91. This would also be a target level. Look at the lows here at 136.91, the high here, the highs here, and the last high here after failing at this break to the upside here. So apart from this little peak up there and this little peak up there, the market has used this 136.91 level as a key upside resistance level. That will continue to be a key upside resistance level for the euro versus dollar. Pay attention to it. The sterling versus the US dollar, we are also below the 100-hour moving average. The 100-hour moving average comes in at 150.71. The current price is trading at 150.65. As long as the price can remain below that level, we should see further momentum to the downside, with 150.37 being a support level. The low for today came in at 150.29. That'll also be support. Look down here at the 50% retracement of the move up from this low, which occurred on March 1st, to the high that occurred today. The 50% retracement comes in at 149.88. Also at that level is this low from Friday at 149.88. So that's going to be a key level on the downside, and that's going to be key support on the downside. On the top side, we got resistance against a 200 hour moving average, which currently comes in around this 150, 115 area. It's moving toward that level, which is also this low down here. So we'll be watching for resistance again at this 150, 115 level on a move back higher above the 100-hour moving average tonight. Let's take a look at the dollar versus yen. Of significance here is the 100-day moving average comes in at the 90.15 level. The low for today came in at 90.14. As long as the price can remain above 90.15, we're trading at 90.29 right now. The bias remains to the upside, and we look longer term for the market to move up toward this 91.98 level or travel toward that level. That's on the longer term basis. Let's look at the hourly chart, and we take a look at the 50% retracement of this move down from this high right here at 92.14 to this low at 88.12. 50% retracement comes in at 90.13. What was the 100-day moving average on the daily chart? 90.15. What's the 50% retracement? 90.13. So we have good support from two different charts, the hourly and the daily, at 90.13 to 90.15. We're going to be watching that level on the downside, and that was the low here today at 90.14. So if the market is able to break through that level, we should see further moves to the downside. And where can we go? I would think that the first stop would be this 89.97 level. That was this low retracement point after the market spiked up in this hourly bar on Friday. If we get below that level, then we could head on down toward this 89.66 level in the dollar versus yen. Let's take a look at the Aussie versus U.S. dollar. And on a daily chart, what's the significance here is just like the dollar versus yen, is we have the 100-day moving average coming in at 90.67. The current price is above, trading at 90.92. The low for the day came in at 90.76. So we did find support against the 100-day moving average, just like we found support in the dollar versus yen against the 100-day moving average. As long as the price can remain above, the bias remains to the upside for the Aussie versus U.S. dollar. Taking a look at the hourly chart, this had moved up above on Friday and has not been below that 100-hour moving average for a while. But take a look at the 5-minute chart. This is telling us a little bit of a different story. We're seeing a little bit of a correction here after the trend moved to the upside. On Friday, the market started to move above the 100-hour bar moving average on this 5-minute chart, and look how many times we tested it. Tested it here, 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 tested it here. Each of the times the market in this trend moved to the upside was testing using the 100-bar moving average as a support level, and each of the time the market bounced higher, 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 and that gives it a bullish bias. When the market finally broke through the 100-bar moving average here, the market went down, tested the 200-hour moving average at this point right here and bounce. When the market was able to hold that level, we moved back above the 100, used the 100 as support until this point when the market fell through. Then we went through the 200, went through the 200, and starts move to the downside. Now that price remains below that 100 bar moving average in the 5-minute chart, and that will be a key. That will be our key to the upside move for this currency pair, and that level comes in at the 91.0102 level currently at the moment. With the price trading at 90.92, we're going to have to get through that level to confirm that the Aussie is going to turn back higher over into the night session. So watch those levels tonight for that currency pair. That's my evening report. Wish you all good luck. We'll talk to you later tomorrow. Have a great evening and good luck with your trading. Continue good fortune. Bye-bye now.